following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope everybody's having a great morning. We're going to take a look at the dollar, and I apologize for missing yesterday. We're still trying to clean up around here from the crazy cold temperatures in North Carolina. I know you guys are not astonished of cold temperatures that live up in the north, especially Boston, but it's a trip down here. People freak out, and we're not prepared. So let's take a look at the dollar first. It's hard to bet against this thing on the long side. So I just keep reiterating, in a situation like this, when we've got no indications on the long-term weekly that anything's changing, and you've got pullbacks that happen into inflection points that you can lean against on the defense side, you just got to do it. You got to blindly close your eyes and just do it. And the long-term slant is still way north on this particular product for me. But, if you're trying to trade this on the short term, at least you know which side to block out. So in this case, I'm not looking to catch these shorts here from 103 and some change down into 101. That's the scarier trade. That's the one that you don't have anything to lean against except on some lower term time frames. But again, the long-term trend on this is block out the short side and try to pick the easy battles on the long side. And it's providing a good little floor here and bouncing again today. So here's the 240. So, you've got a little bit of resistance here on the first pop up here at 102.56. But again, not looking to short against that. That's just a situation to possibly take some weight off. I personally believe this is going to go much higher, but it's not going to go in a straight line. So that's the drill on the dollar. Let's take a look at the euro. This has kind of been the eternal short. Here's a long-term weekly. Nothing new here, 105.58, 59, something to lean against on the short side on the ultra long-term. And this is kind of nice because we're now getting back down below the daily to 104.43, the unfair low. So what does this mean, really? It means that we're not wanting to stay in the balanced area, where we're wanting to kind of tranche lower here. And on the euro, I've talked about this from the one, I think I was talking about my personal battle with the euro around 113, 112, and not wanting to get shaken out of the trade. I'm still trying not to even look at this till par. And I have played around with the options a little bit, trying to dismantle some of the profits. But having this on a short and then talked about buying in the money calls and just letting this thing do its thing and fall apart ultimately, and not really having to suffer through stops, noise, announcements from the talking heads, and also, the yapping type rhetoric from the ECB or even our Fed, and just trying to actually not look at it and let it do its thing. So I have taken some off the table here. This is kind of a long term, and we're really 800 pips below where we were talking about. But I think it's going to go lower, so I'm trying to hang on to some of the position. One of the things that's really difficult to do in trading is to let something breathe and let it do its thing. And a lot of people, when they see profits on the table, very good friend of mine just can't stand to see them, so he takes them. But there's a ebb and flow to these markets, and you have to take some off the table. You can't go wrong taking some off the table. But if you're taking some off the table early and then letting the things go against you tremendously at times, that is completely bass backwards of any good trading system. So a trading system that's right about 85% of the time. Well, somebody who wins 85, put it this way, an individual trader whose success rate percentage-wise of wins to losses, which is very high. You've got to take a look at the risk-reward ratio, and you've got to take a look at that. What's his average winning versus his average loss, and a lot of times if that's below, let's say every time he wins a trade he wins $1, and every time he loses a trade he loses $2. Not a lot of systems work like that, so this is kind of case in point. All right, and we've done a lot of studies with automated systems. John De La Paz I work with every day. We're building some systems for China A-shares products right now, and we look at those numbers religiously. It's also good, when you're talking about, just let's go back to the euro trade for a second. You go into some of these, I'm just going to use casino for example. You bet the same way, you will lose money over time. I mean, you have to change your bet. So when you have situations like the euro trade, a lot of times, we talk about this a lot, you can make your whole month by just, putting on a really high risk reward scenario. So I was willing to get clipped for maybe 150 points on that, but the upside is almost unlimited. I mean, the euro can't go past zero. But if you look at it that way and change your bet based on when the probabilities line up a little bit more in your favor, this gets extremely attractive. So changing your bet's a big change in your position size. Excuse me. Did I use the word bet? I think Steve Rhodes is going to get on me for that. Let's take a look at the Aussie. Again, this thing's bounced pretty good off the bottom here, but I don't see this as a huge amount of leverage. I'm trying to stay away from the Aussie right now. Let's take a look at the Chinese situation relative to the dollar. So, the long term is this. Let me pull up our weekly. So again, just long and strong. Nothing, no yellow bars. Nothing in the scanner telling you anything different here. But the daily obviously had kind of a key reversal situation here. And 69152 support on this now, and we're getting close to this situation just probably having some government intervention, but it's still long and strong right now, even though we had that pretty serious dip last week. Let's take a look at the British pound. Okay, so this is one. I think John from Philadelphia, we talked about this a little bit, and let me see here. I got to exit there. We're going to be right back, folks, and take a look at the British pound. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we're finishing up with the British pound. John from Philadelphia called in the other day, had a really good conversation as always. And one of the things we talked about was the British pound, and talking about, the sentiment is so bearish on this thing all of a sudden, and everybody expects it to go down to 110 now. And that's when things usually turn around. That was his topic that we were speaking about when it comes to this instrument. But, I wanted to show you in the scanner, just let you know, this thing, you kind of can do really quick reads on instruments, understand where all these inflection points that I talk about are, kind of pull up the chart in here, which I think you guys are going to just love the new version of this. We've also got an HTML5 version that's coming out. We're almost finished with both. Get some betas out, hopefully. But, you can look at all the time frames that I look at right within eSignal and understand this thing's kind of crowding those lows a little bit here. So I'm just too chicken to trade that bounce off of that unfair low. I hate to have gut feelings, but man, it just feels like it's going to do a whoosh before it might reverse back into that balanced area. Then that would be probably more of a opportunity. If the train leaves and it starts just roaring north, I'll eat my hat on the air. I'm just kidding. We'll have to just look at other opportunities with it. So no harm. So let's take a look at the Canadian dollar while we're talking about currencies here. All right. Here we go. So again, this is something obviously related to the dollar a little bit related to oil. Larry talks about that a lot, and he just has some great insight when it comes to those relationships. So let's take a look at oil, and we're going to take a look at the S&Ps. I always leave the S&Ps alone for a while now. If you've noticed, they just keep going up, spinning around. But obviously, there's some rhetoric coming out today from Trump, and Sorry, the S&Ps and the had brain lock there. The S&Ps and the 10-year and all the treasuries will probably react to a lot of that. Let's take a look at oil, though. We've, kind of broken down here. 52.26, I was looking at that as support. I got clipped on that one a little bit, but again, that's what these inflection points are for. Now we're just kind of reversing back into the balanced area. So I'm not exactly excited about doing anything with it yet. I'd love to see a retracement back up into 52.26. I'd love to look at some other things going on in the globe to try to get a bearing on that. But right now, it's kind of a no trade for me. I actually thought oil was going to use that as support to maybe make some new highs, but it looks like it's not going to happen now. Let's take a look at the 10-year. Now, the 10-year, the 30-year, we just like gold, we kind of based around some weekly unfair lows that appeared last week. Because this thing reversed back into the profile here, 123.10, 123.20 was that DMZ that we were talking about. Here's the 10-year. A lot of people, are now talking 2.6 and 3.0 rates for the 10-year. Just like John from Philadelphia was saying, I mean, when everybody starts getting on the same side of the bandwagon, sometimes you find bottoms or tops. 10-year's not a short right now. That's at least you can say that. The 30-year, it's just going to be kind of news driven right now. Here's the 30-year. Here's that same look we had on gold in the 10-year, just kind of reversing back up, finding support on that inflection point, play defense, boom, get a little pop. We haven't reached this 154 target yet, but I think that's actually attainable. Let's take a look at the VIX. All right. So VIX is just hovering. Hovering here. But sub 12. Still the play on this is the long-term trade on an options spread, in my opinion, and just let this thing do what it's going to do until the volatility comes back in. Gold. I'm sorry. I was looking at some comments in the den. Gold, so similar to that 10-year and 30-year situation that we just talked about, crossing back into the balanced area. A lot of times these things are fully explored when that happens. That's actually a trade in itself that will have a custom sort on within the scanner to identify these types of scenes. It's a range trade. But it's a pretty powerful range trade when these types of setups happen. So here's gold. Your initial targets were 1169 on this. The big target's 1211. But here's that, reaching 1169, powering through it, coming back using that support. Not a bad little situation. Don't see any reason for it to change right now. Dollar's rallied a little bit, and gold has just sat there like the Rock of Gibraltar. Let's take a look at silver. So we're also talking about silver kind of just all of a sudden catching up. And right now, silver, I still think, gold's probably a little bit better situation. But silver, again, we've got 1768 as targets on this. If you're looking at silver from the long side. I'm not trading silver right now. Let's take a look at copper. So, copper kind of did that Shanghai situation where we kind of rattled around weekly unfair lows and has started to move up again. So, the big trade, Joey was talking about this around 2, just a massive move, and now you've kind of got that pull back to support situation. And copper's actually looking relatively attractive still. Here's the 240s, a little bit of resistance today already, but not really pulling back off of that. So I think the long-term trade's still north on copper. Here's the Shanghai. or the CSI 300. So still like this trade from the long side a little bit here. Getting a little bit of a pullback today, long-term long side. Let's take a look at the XLE. Okay, so the long term on the XLE, you're coming right down into 74.11. This is the, I'm sorry, 73.87 is the big number there. We've reached a low of 74.05 yesterday. Not trading yet today. All coming off. I don't know where this thing's going to open. You'll just have to take a look at that. Let's see. I don't know if that's a real print or not at 74.11. We'll have to just wait a little bit on that. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So taking a look at the S&Ps here on the scanner. S&P and the NASDAQ put together. Let's take a look at the index itself. So here's the situation on the S&Ps. Again, trading above profiles here on the weekly. Almost went down to support last week and a half there. Here's where we're at. Again, just kind of spinning around compressing up into that 20,000 Dow situation. Do have a lot of talk on the TV today. I kind of think that, if you're going to trade this, I don't know if option premiums are getting pumped up right now, but we could have a move either way. You never know. I mean, so it might be time to look at, just testing it out, trying to buy a straddle or a strangle, which means buy the calls and the puts at the money or out of the money and just do a non-directional trade. You got to kind of take a look at and see how expensive that is right now. But I feel like we're going to have a move one way or the other. We're not just going to hang around at this Dow 20,000. We're just either going to reject it, as Tom would say, or we're going to start moving all shorts out of the marketplace, at least temporarily, and that's going to be possibly an extended move, at least for a little while. So that's the take on the S&Ps. Not really looking at anything other than that right now. All right, so let's take a look at some NASDAQ numbers. I hate trading the NASDAQ. Rather trade the S&Ps. So the NASDAQ's a little bit different story, kind of powering up here. I know you guys know that, but the Dow, and again, I'm just kind of looking at the S&P trade more than anything else. Here's the continuous Dow. And here's the weekly profile. We don't look at the Dow a lot because it's just not a good sample of what's going on in the economy overall. But there's that kind of 20,000 area, or on the futures, a little bit lower there. Unfair high at 19,933. So as we look at this, what do you do? Again, we're kind of rejecting it a little bit here, but this is the Dow futures. You got support at 19,430, and shorter term support. See how these profiles are compressing in now? This is the daily. We had this daily profile. Start middle of December. It is carried through till now, and even got compressed even more thin here. So that's why, another reason to start looking at an option trade. You don't have to, back up the truck and do an option trade here. Just put something on. A lot of times you'll get just massive risk reward scenarios by looking at a non-directional trade on something that is probably, the volatility is low. You got to buy volatility. You look at the VIX. We're pretty low historically on volatility right now. So that's another reason I'm looking at, the option trade more than anything else, because, rarely does this thing go lower than 12 historically, and rarely does it stay below 12, even if it goes below 12. So give yourself a little room. I think we're going to have some short-term vol, but that's kind of the easier way to look at all this right now, in my opinion. Let's take a look at the Russell. We don't look at this one too often either. Russell continuous futures here. All right, so kind of similar to the Dow. I don't trade the Russell, just wanted to show it to you there. It's all in the scanner, by the way. I'm just showing the charts. Let's go into the scanner. And again, it's hard to look at trading an individual stock right now unless you're going to kind of leverage it by the relative strength, relative weakness situation. I think there's a great trade on the volatility index itself right now. So if we're looking at stocks that are, breaking down, you don't have a large amount, but these are the ones that, you could look at. Red Hat right in our backyard here in North Carolina. There we go. And here's the weekly. I think we looked at this one the other day. We have reversed back outside the profile. Defense above 72.64. If you're looking at some shorts out there, this might be a better way than just shorting the S&Ps right now. L3 Communications. Let's take a look at this one. So this one, you've got some targets down south, 147.14. You got a chance to play defense above 151. So, maybe a decent little risk reward on LLL. ENDP. Let's take a look at this one. This is the kind of gift that keeps on giving. We talked about this one the other day. It is what it is. And we got right up into that unfair low here at around 1758, and we just started coming off of it again. So This is kind of the eternal short here. General Mills. Man, this looks ugly. Getting outside the profile this week. Any type of market move down, and we don't even have to have, I mean, the S&P sitting still might even drive this thing lower. GIS, IBM. I'd probably stay away from this one. Let me see. All right. Here's the weekly. The daily kind of, I think this is not the biggest leverage play right here. Clorox. Let's see. Yeah, so we're in a pretty good downtrend here, and this would have showed up on downtrend resistance this week, clipping or just going up and hitting that unfair high 123.35 and just coming off. So let's go into this. You're going to find these opportunities like Clorox in here as they happen. You can always go back to this and actually then kind of drag them into a favorites to just kind of keep them on the radar screen and see how they act. But let's see what looks attractive here. Maybe not that one. TripAdvisor. Let's take a look at this. All right. So if you like, setups like this, there's TripAdvisor, there's the daily, there's the weekly. This is a nice little scene right here, and you're only going to find this in the scanner relative to profiles. So let me see if we're trading this morning. Nope, not trading yet. So this is the reason I picked this out, TripAdvisor, is you've got top, and it's in downtrend resistance, and that means it's kind of been in a downtrend, and it's just kind of empathetically running up into some resistance. So these are kind of the wait patiently situations that might be pretty ripe. Put this one on your radar, TRIP, right out of the scanner. But again, anything can happen if the market starts going wild here and the volatility picks up based on some of the things coming out today, and the VIX being super low. Anything can happen here, so just make sure you put your stops in. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look at a couple other things that meet the criteria downtrend resistance. This is staples. Here's the daily coming right up into that inflection point. So this is kind of a DMZ, and we haven't had a weekly close back in this balanced area, but again, you got kind of more resistance still here, a little bit of a range there. Staples, in my opinion, still looking like we could head lower here. So again, if you're looking for individual stocks that meet some decent technical criteria, downtrend reversals. So let's take a look at this one. These are stocks that have kind of been in a downtrend that are popping their heads up a little bit. Let's take a look at STJ, St. Jude Medical. That's kind of, let's leave that alone. Let's take a look at MCK. Yeah, not a lot of good candidates on here on this particular sort. Let's take a look at another sort. Let's just take a look at breakouts. We looked at breakdowns. And it's about the same number of stocks breaking out as breaking down, if you remember, taking a look at some of the reds on the breakdown sort. So, in fact, let's just take a look at this. Let's just see. There's about 20 there. Breakdown, about 18 or 19. So the market is really, all things considered, just super balanced right now and sitting around these highs. That's why I think that VIX play, or even buying, like we said before, the straddle or strangle on the S&Ps might be the play here. You don't know what's going to happen, but the VIX is super low, and it's, give yourself a little room. A lot of these, and let's just take a look at the weekly and daily breadth charts here. So there's 265 stocks out of 500 within weekly profiles here. There's 231 in the daily. And again, I think once the market starts moving one way or the other, we're going to get some follow through. I don't know what's going to happen. I got to admit that, but you just got kind of all things lining up for just an explosion. So take a look at that trade. Okay, so here's the indices profile heat grid. This is kind of what's going on in the globe as far as profiles go on indices globally. Just wanted to show you that. Let's go into the ETFs really quick. Healthcare. Let's go into here. And let's just see here. And let's take a look at the XLV before we start looking at some of the individual stocks there. And Larry wants me to look at Microsoft, and we will definitely do that in just a second. The XLV. All right, so there's not a lot of edge here. We've had a pretty good rally up. There's been some great stocks that have moved north here. I just think that taking a look at the individual stocks we'll look at in a second, we're going to comply with Larry's orders here from the den to look at Microsoft. I've been super bullish on this since we started moving above 53. If you've been watching this show, that close above, go back and retest, and then just kind of weathering quite a few storms along the way. The Trump election. This is the weekly. Huge supports at 59.33. We're trading 62.62 right now. Kind of sitting above top of the mountain on the weekly and daily. I think this thing probably is more bulletproof than anything else. If you're considering kind of parking equity in an individual stock, this is the type of thing. I don't see this particular stock going down fundamentally or technically. It's just shown a lot of strength. But if you're just kind of looking at this and saying, "Wow," Logan's saying it's looking Teflon coated. There's a way to hedge your bet on something like this and try not to pay a lot for insurance. You might want to play around again, looking at some option straddles on this. I was just kidding, Larry. I know it's a request. Here we go. Let's take a look at Coca-Cola, then we're going to go back to the XLV. All right, so Coca-Cola, this is an interesting one. I want to go into the scanner, and I want to go into here and go top. Let me see. Okay, so we might be out of the range just a tad here on Coca-Cola, but oh no. Yeah. Okay, here we go. So Coke's pulling back. You got some support here on the weekly. 41.88. Is that it? I think that's right. See if I can see that better. 41, excuse me. Support on Coca-Cola. You've got that stake in the ground. Oh my God, hold on. My charts are messed up, guys. Sorry. That's why it wasn't showing up in the scanner. Let me get these numbers right here. I don't know why that happens. See if I can save that. There we go. Yeah, I was thinking Coca-Cola wasn't trading above profiles on the daily, or on the weekly, excuse me. So Coca-Cola continuing to drift down here a little bit, but you've got some support here, even though you're in that long-term middle of the profile. I don't see a lot of leverage with this, and I apologize for that chart not being what I thought it was on the weekly. Let's go back to the XLV. All right, so let's go to the ETS. And let's look at healthcare. So we've had a big run into the XLV, and it's hard for me to buy individual stocks right now. But if you're looking to try to find something that is really not really complying with the XLV move up, PRGO, let's take a look at that one. I'm just looking at the profile cell structures there, and here's where we're at. It's still a $85 stock, $84 stock. Every time this is kind of a turn the wrench the same way situation, and don't really see anything changing here. So if you're looking to hide in some shorts, PRGO might not be a bad situation. The market comes off. You've got this thing not cooperating whatsoever with what's going on in the XLV, and also just looking there with the market situation. Here's Mylan. There's the daily. There's the weekly. Let's go back to the daily. Got a little chance to play defense here on this one above, let's just say 40. Target's 37 down below. Again, you might be able to hide in things like this. Let's take a look at Tesla before we leave here. David White's favorite stock. He's got his retirement backed into this thing. We're going to take a look at it when we come back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And just taking a look at some option prices there. I fully agree with some of you guys in the den. Something, it just, with this VIX low, the markets where they're at, we're going to have one way or another. I have no idea which way they're going to go. So a non-directional trade may be in order. Let's take a look at Tesla. All right, so like I think David's been saying, just a heavy short interest in this stock that's kind of showing itself. I just, it's kind of terrifying to look at this from the short side right now. So kind of all systems still, you'd rather see some technical damage here on Tesla. It's just not happening yet. Let's take a look at 3M. This is another one I've been following. Yeah, so 3M, I've been looking at this from the short side. 178.10 stops above. I still think this thing, I think we can, especially now that we've kind of started breaking the dailies here, I think we can drift lower. 165.5 will be the target on that. Big Mo. So I had an email about this one. I can't see this from any side other than long. So that's my kind of stance on that. So just to recap, let's take a look at the for you in the show today. Let's take a look at the S&Ps. Non-directional trade on this, I think, is in order. Smack dab in the middle of our daily profile, just kind of sitting there. 2237 is the bottom of the profile down here with the unfair highs on the weekly too, around 2224. So that's your initial targets there. Taking a look at the 10-year. Still kind of looking, we had a profile appear below price action here and kind of edge up at the same time. So that's pretty bullish for the 10-year in general. And we kind of closed above, came back and retested, and now are using the top of the mountain, the POC on the weekly, to move a little higher there. Gold, still kind of like this. Really caught a decent bottom here around 1146. We talked about that, kind of stake in the ground there, being able to play defense. 1211 is your targets on this trade. The dollar, still like this from the long side. Don't see any reason to take that trade off whatsoever. The VIX, we've kind of shown. Let's take a look at the 30-year just to recap on that. Similar situation, 154's initial targets on that. Then you've got 156 after that. And we're going to take a look at March beans here. So still a lid here above 1020 on March beans on the short side. Still think that's in order there. Let's hit Amazon before we get off the show. All right, so Amazon's kind of popped its head up. 783.58 is going to be support on that now. And here's the weekly. Just smack dab in the big, wide, fair auction now on Amazon. Don't see a lot of ways other than massive volatility to happen on this one. Let's take a look at Apple. So we never kind of got back below this 114.82. In fact, used it as support a week and a half ago. Come on. There we go. So still a no trade for me on Apple. It continues to move north. Not a big fan of buying it. All right, guys, stay tuned for Larry, this next, and all the rest of the hosts on TFNN. Have a good trading day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.